I want us to come back to our discussion here in studio. Remember, I'm joined by Frederick Riaga from ISPAC. Thank you for staying with us. And Frederick, you've had the concerns of different Kenyans, but I just want to start off from something from that discussion with my colleague, and talking about absorption of the budget into the counties. As much as the counties many times decry, the slowness of, the money is going to the counties, we are also seeing the counties sometimes returning, the cash back. What can you talk to us about that absorption of the budget into the counties?
Thanks, Betty. The first thing that I would need to allude to, just in reaction to what Masese did say, that we are allocating 12% of the current budget.
Yes.
I guess he missed a point because, as per the Constitution, we do not allocate 12% of the current budget. Article 209 talks of allocating at least 15% of the last audited and approved figures on revenues. And as we speak, the most unfortunate thing, we are still using the 2013-2014 audited financial statements as the basis for sharing revenues between the national government and the counties. So I think there is need for clarity on that.
Okay.
Point number two, in terms of absorption, let's split it into two: absorption recurrent and absorption development. I don't think any fellow has a problem with absorption recurrent.
Right.
That I reviewed some audited financial statements, and one county in some instance of absorbed. They did 1 or 2% of what was allocated for recurrent.
Okay.
The issue is absorption of development budgets.
Okay.
Let's break it through. One, at the county level, a bigger proportion of their funding is on account of national government transfers. And hence, the manner in which the allocations trickle in would play a role in informing the level of absorption. If we have consistent disbursement, exchequer releases on time, then would see absorption moving a little higher. I had an experience, and I think that was with one of the counties last year, where the governor came to Nairobi and he was told, okay, you've got your money on 30th, on 28th of June.
Yes.
So 28th of June, and you're being transferred close to 600 million shillings. What are you going to do with that, even if it was going into development? So the fundamental thing, we need first to streamline the procurement processes. Procurement of service providers that support development expenditure. It's crucial because if it is not efficient, then the process will be elongated and would not see much of the development projects taking off. Then point number two, funding is crucial. Timely releases of cash by the National Treasury is crucial to county governments absorbing that budget.
Okay.
Thanks.
Interesting. Before I let you go, we have to talk about, a number of concerns that, I'm sure you've heard from the Kenyans who were interviewed. And my question is then, with all the unfortunate news that you talked to us about earlier, about, having the VAT, on essential goods, and, maybe some taxes, of course, for the Mwananchi. So what will Henry Rotich tell Kenyans this afternoon with regard to just the cost of living, which is skyrocketing?
I don't envy Henry Rotich at this point in time, because he's staring at a very bleak future where he has to fund the Jubilee government commitment to the people against a very dry resource basket. Dry in the sense that he has tried to mop up as much as possible. And every time, every additional effort does not generate much.
Yes.
Allow me to go back to the KRA, for instance.
Yes.
This current year, the KRA is likely to miss its budget to the tune of about 300 billion shillings. Then you grow that target by another 300 billion, from 1.4 to 1.7. By what magic would we expect the KRA to do this? So on analyzing the exemptions and the incentives that have been extended, we guess that the minister says they've not been productive. They've not been productive. For one, the manufacturers, there is a claim by government that manufacturers do not extend the benefits out of either standard rating or exemption to the final consumer. So then the government says, why don't I then bring in all the resources into the resource basket, then reorganize my priorities in terms of creating a subsidy in some form that is targeted to the various sectors of the economy. But as we speak, we are looking at everybody, all possible taxes coming in. We've given the classical example of VAT on fuel, petrol, diesel, kerosene, jet fuel. That comes in, we will see the multiplier effect cutting across the economy. We are seeing we're looking at the presumptive tax being introduced through the income tax bill. Once it is enacted, then there is a possibility of a 15% tax on the mama mbogas outside on the streets. It is, but however, I guess it would not be proper if I left without saying that the KRA may need to move out, be a little more abrasive in chasing those that have the ability
to pay.
There is need for a more integrated approach to sourcing for revenues, all the tax revenues into the basket than they're currently doing. There is need, and I see the minister in the budget policy statement, the minister proposing that they would be looking at tapping into databases outside government, both private and government institutions, just to link and see where does the revenue lie. A good move. We have stated that for a while now. Is it possible for the national governments and the county governments to combine effort in reaching out or in chasing those with the ability to pay? Yes, because to some extent there are strengths at the national government and there are also strengths at the counties, because counties are able to get the mama mboga pay daily fees on market access. How is it possible for the government, KRA and the national government to tap into such strength to ensure that further we bring in a little of what they make? Because income tax is on account of what? Incomes that you generate. You cannot generate it on the back of other people.
All right.
Thanks.
Interesting. Let's wait and hear. I mean, like you said, it's a tough day for Henry Rotich. A lot of expectations from Kenyans, but you know, I'm not sure if he has a lot to give today. But we'll wait and see. You know what will be happening later on in the day. I'll be speaking to Frederick Riaga, who's the Chief Manager, Public Policy and Research at the Institute for Certified Public Accountants here in Kenya. Thank you for your time. All right. So we'll take a short commercial break, and when we come back, we'll be having our Abby again, our business anchor and reporter. He's going, of course, to be breaking down more figures for you here on KTN News Centre with regard to the budget this year. That's going to be happening in a few moments, so don't you go away. We'll be right back.